Hello and welcome to the special broadcast of Samvat 2078. I'm Anisha Gupta. The start of Samvat 2078 could well turn out to be a cherry on the cake for the commodities sector, which is bracing for its best annual performance in a decade. While higher investment on public infrastructure made metals shine, continued improvement in the global demand for commodities added as a catalyst. We are going to discuss the key themes that emerged in the commodities sector in the year gone by, discuss the road ahead with our experts. But first, let's turn the spotlight on gold. Has it been a shiny Dhanteras for the yellow metal? Alisha Sachdev gets us the ground report from the Gold Souk Mall in Gurugram.
Well, it is the auspicious day of Dhanteras and we're coming to you from the Gold Souk Mall in Gurgaon. You can see that there are a ton of customers here already, so it looks like jewelers are busy and that can only be a good sign. I'm joined by Mr. Subhash Bhola. He's the director at Bhola Sons Jewelers and they have stores in the Delhi and NCR region. So thank you for speaking to us at CNBC TV 18. First things first, give us a sense of what the footfall is currently like. From what I am able to see, you are busy. It looks like the other jewelers are as well. Compared to a pre-COVID year or compared to your last Dhanteras, what is the kind of buying sentiment and customer footfall that you are seeing?
Well, as far as the Dhanteras is concerned, you know, it's already an occasion where people want to invest, considering that Hindi mein kehte hain dhan tera guna ho jayega. Yeah. But the original thing believed to be is that it's an auspicious time. It is a time when the celebrations are starting, when a lot of festivals start and a lot of weddings starts as well. So there is a lot of rush nowadays going on, because even previous to previous years, as far as compared, last year was a COVID year. Previous to that, sales were really good, but this year they are substantially increasing.
Compared to a pre-COVID year?
Yeah, in spite of the fact that the rates of gold have gone up substantially, people are curious to buy, and I see probably sales are almost 30%, 20-30% more than the previous year.
Clearly festive demand has firmed up. You were indicating that there are also fewer avenues for people to spend their money, so they're choosing to invest in gold instead. Can you elaborate on that trend?
Well, as far as I perceive it, one of the reasons is that the people have spent money into various other activities, various other investments, but they haven't seen the premiumness as they have seen in gold.
Right.
Gold have proved them that this is the investment where whatever they invest is going to increase, and they have realized that whatever money they had invested into gold, it has increased substantially. And this brings their faith much stronger this year as well.
So clearly, as sir just outlined, customers know what they want at this point in time. They don't have time to waste and they clearly want to put their money in gold. And of course, wishing all our viewers at CNBC TV 18 a very happy Dhanteras.
Alisha, thank you so much for that. Well, yes, there is this festive cheer across markets and we have seen commodities actually perform quite well for that. Gold and silver hold a special place when you talk about festivals, especially this quarter as well. But while gold and silver haven't given you very strong returns in this calendar year, but what is expected in the next 1 year, including other commodities, is what we will exactly discuss on this show. Joining me now are experts from the commodities space. Naveen Mathur is Director Commodities and Currencies, Anand Rathi Shares and Stockbrokers. We also have Kunal Shah, Head of Commodities and Currencies Research at Nirmal Bang. We also have with us Kishore Narne, who's Head Commodities and Currencies at Motilal Oswal, and Pritam Patnaik is Commodities Head at Axis Securities. Gentlemen, hi, a very happy festivities to you and thank you so much for joining us here. Kishore, let me start with you, and since we are talking about precious metals right now, the last year hasn't been so great. So if you invested last Diwali, this Diwali, you still are slightly into the negative, but then that is the case about gold and silver. You always have to see it as an investment. But if somebody was buying gold and silver right now, what are the fundamentals that you're watching for in sense of support, and where do you see the prices?
Yeah, Manisha, I think things are very simple right now. One is inflation, the other is whether the Fed is going to cut down the money supply or not. And the third and the last one is the alternate asset classes. That's the equities and the risky assets. I think these three are the key components of decision making as far as gold investment is concerned. So in my view, especially whenever we are discussing on occasions like that, when we look at long-term picture rather than the short-term day-to-day activities, I think gold becomes a crucial part of the portfolio rather than a tactical asset. And the tactical asset component actually keeps changing. For example, you have, let's say, 5% or 10% of your portfolio into gold. At times when you fear of worse, probably your risky assets like equities are overheated, or the bond yields are expected to raise further. So at some point of time when the economy is not doing good, your component of gold will go from 10% to 20, 25%, depending on this thing. So that's the tactical move which you do. And over a period of time, again, when you see the economies are doing good, we are coming out of pandemic and the economic recovery is looking much better than what it was anticipated, that component again will come down. So typically that's what the swing is. The basic 10% to 15% of your portfolio has to continue to be there, because that's the insurance you're taking against the risk. So keeping that aside, so at this point of time, what I see is short term is volatile. It's going to be vulnerable because maybe tomorrow Fed, again, as we conclude the FOMC, probably there is a larger expectation that Fed will actually indicate the actual tapering will start. And the quantum and the speed has to be come out. So probably it's too early to decide on that, but definitely there will be a knee-jerk reaction to that, number one. Number two, inflation. Definitely inflation is going to be sticky. It's going to be long-term. Fed is worried about. Already you see core PCE US is going to be around 3.6%. So definitely Fed and all the central banks have to fight inflation. They will raise rates. The rate increases will be much sooner than anticipated. So that again is a negative for gold. So keeping these two apart, I think inflation continues to be the support factor for gold. So what I see is 12 months to 18 months, it is bullish on gold, definitely. But should I buy now? Probably, again, so I'm not talking about the auspicious thing, but if you are doing a tactical investment, once the Fed comes out, probably you get a knee-jerk corrections. Okay. Corrections and dips are good to buy. If you're looking at 12 months, I think 52,000 is a target which you can look at next 12 to 18 months. So it's a decent return which can be anticipated, but not the pace will definitely disappoint you.
Oh, okay. So yes, stay invested, make it a part of your portfolio, but not so much, because the kind of run that we perhaps have seen in the last few years may not continue in the next 1 year there. But Kishore said one very important thing, that the long term is still strong, especially in case of many commodities there. It is a short term where you might see corrections and volatility just about continue as we see more and more central banks come out with their curb in sense of stimulus. And that really brings us to the next question, Kunal, and this one is on metals, because while we did see last year as a very strong one, and there has been a built-up on this year as well, is that next year going to be similar like that? Are we actually looking at a bull run? Are we actually looking at that super cycle in many of these commodities?
I don't think so. I think we've seen the best. Whatever we've seen in metals is the best, and I don't expect that to continue going forward in the next year. Three reasons mainly. Like one Kishore said about the inflation, okay? The inflation itself is the biggest worry, and all the liquidity, what we've seen from the central banks is not, it's not permanent. It's the short-term measures which central banks have taken in order to combat with the pandemic, ongoing pandemic. So when your money loses value, the value of commodity shoots up and all the commodity generally rallies. So may it be agriculture commodities, metals or oil or gold, it may be any commodities. But now the things are different. The Chinese growth at first quarter was 18.5%. This quarter, it is expected to be somewhere at 1.5% or not even 2%. So the Chinese growth is faltering. There is a slowdown in China taking place. So what you've seen in last 10-15 days, steel prices are down by 30%, coal prices are down by 40%, this kind of move. So already we are starting to see this in metals, this entire slowdown of China being played. So the bullish trend what we saw was mainly on account of the supply concerns. So many mines in South America, Chile, Peru, Mexico, even in China, they have closed down because of COVID, because of environmental concerns. But now, with this prices right now, I think a lot of these mines are going to open in South America. I'm not talking about China. They are deliberately cutting the production. But the demand is falling at quite rapid pace in China. I'm not talking about demand ex-China. But when you talk about metals, still the 50% of the consumption takes place in metals. So on one hand, you see aluminum production cuts. China is producing 36 million tons of aluminum. 10% of the supply is cut officially by the government. So 3 million ton is not there in the market, and aluminum prices have corrected from 265 rupees on MCX to 217 rupees. This is a clear indication that the giant, the China, which is consuming commodities, is slowing down. So not bullish for the next year. Sell on rallies, metals. I'm not expecting any major fireworks coming out of this complex. Supply concerns will lead to some bounces, but the demand side looks terrible. I'm expecting copper market by the end of this December will be posting the biggest surplus. I think 1.8 million tons as compared to last July to December 2020, and this year the demand loss is more than 1.8 million ton itself in China. So I think we are going to see some selling in metals. The metals which look good to me fundamentally is nickel, because of the EV demand, the electronic vehicle demand. So barring that, copper, my target is $8,000 on LME, and I'm expecting copper, zinc, lead, all these metals to remain under pressure.
All right, so that's two sectors done, and there could be some pressure coming into the markets there. So the next 1 year could be volatile for commodities, and the pace that we've seen in sense of growth may not just about continue. But with that, gentlemen, we have to stop for a break. When we come back, the discussion continues on the other side. Welcome back to our special broadcast of Samvat 2078, and we are discussing commodities here. This one is to you, Pritam. The major headlines also came in from the crude oil prices, where we saw 7-year highs, and in last 1 year we've seen nearly 120% gains come in for this one. What's your sense here? I mean, after the winter season, do you see some tapering, some decline here as well?
So yeah, absolutely. Crude was on complete fire, if I'm allowed to say, allowed to say this, but you're absolutely right. I think expectation from everybody in the market is that crude oil rally will continue unabated. Everybody's been touting the $100 mark, and everybody's even talking about $120 mark. But we have to be a little realistic over here. I think clearly there is a supply constraint over here, where the demand is outstripping the supply right now, primarily because of the global economy opening up post-COVID. There's a huge demand. But the energy crisis, which we've seen due to natural gas and coal, has kind of aided the crude oil prices to rally further, right? But is this rally going to continue unabated? I really don't think so. So we're going to see a little bit of volatility throughout the year, in my opinion. If the winters were to turn a little more severe, that will impact the natural gas prices, and you could see a little bit push on the crude oil prices, and you could see it crossing the $100 mark. But will it sustain over there? I really doubt it, because comes summer, or if you have a milder winter, you would see a sharp correction in natural gas prices, which would then impact the whole demand on the pressure on the crude oil prices. That said, am I negative on crude oil? No, I'm actually will be conservatively optimistic on crude oil. My sense is that in India terms, we will see levels of 6,100, I think, in which it will be a good time to enter, because towards the end of the year, we could even see 68 or to 6,900 rupee levels in crude oil. So, like I said, optimistically, conservatively optimistic.
All right, I get that combination. Okay, Naveen, this question is to you. So, all of you are promising that the next 1 year is going to be volatile, not in sense of bullishness, but yes, it will have its, issues going forward in sense of demand, supply. Naveen, if you were to make a portfolio, what is it going to look like when it comes to energy, metals, gold and silver? How are you going to, put in or allocate resources here?
Thank you very much, Manisha. Very good evening to you, and happy Dhanteras to you and the entire CNBC crew and the investors who have been watching this show. So I think the market's going to be very, very volatile. Let's be very clear on this. So commodities definitely, as Kishore also said, and we keep repeating on these kind of shows, the portfolio allocation towards commodities particularly needs to be approximately 10 to 15% basis various scenarios, but then minimum 10% or so needs to be part of the portfolio. If I say portfolio, you only end up talking about bullion, because that's what something is available for the common investor, for the common people to trade on. So I would say continue doing that particular investment. If you ask me on the commodity side, I would say largely bullion only, and with silver ETF coming up, Manisha, that's another option. Means for people to stay invested as they used to do it for gold ETF or sovereign gold bonds. They can do it now with silver ETFs too. So I think the total portfolio should comprise approximately 5 to 7% of the bullion part. If somebody is looking forward for trading, yes, the markets, as I said, would be volatile. So they have to be cautious. I would differ with Kunal to a little extent that I don't see too much of a pressure coming up on metals space. Yes, there are a couple of metals which would continue to be under pressure, but nickel and all those metals from 1300 to around 1700 is something what we are looking forward to. So as a portfolio, I would recommend to be only with bullion. Because you don't have any other commodity to be kept aside as part of the portfolio as an asset, up to unless you are not a physical player. I'm seeing rush. Actually, on this Diwali occasion, we are meeting various customers of ours in the industry, and 2 or 3 customers have said it rightly so, that this particular Diwali, they are seeing not even time to have lunch, a bite of lunch.
Okay.
So that's the kind of volume in the business. And a couple of them said actually they have done all-time high in terms of the businesses. So I think the people have money, and the prices are low. It will always keep up the good pace for the people to be invested in bullion. And at the same time, for trading, yes, crude is something which can be looked into for the volatile people who are really interested to make a quick buck, so to say. So I think a trader and investor needs to be separate. Investor for portfolio, 10% on the bullion, and for the retail trader or somebody who wants to make a quick buck out of the commodities, metals and crude, particularly the energy space, looks good in terms of the trading activities for making money. So that's my take. But otherwise, I think as Pritam also said it rightly, so optimistic bullishness. I think 49,000 something levels should be looked out for gold, and around I would say 66 to 67,000 would be something which we would look forward to in case of silver. Maximum 70,000 in case of silver. So 49 for gold, around 67 to 70 on silver. So that's where our call would be. For crude, I would say $85 looks positive and can be around $95 to $96 going forward in the next 6 to 7 months. But long term, portfolio-wise, I would only recommend people to use the bullion, be it ETF, be it sovereign gold bonds, or now the silver ETF. Part of the portfolio, and 10% minimum at all the good times, because we have seen it, Manisha. We have seen it in 2020 when the entire risk assets were not doing too great. We had only one savior, which was gold. So 56,000 levels.
I totally get that, yeah. And I get the mood that all 4 of you are putting on table as well, that it is going to be volatile going ahead. Yes, portfolio needs gold and silver. Metals and energy is going to be quite volatile. So yes, trade opportunities would come into that. But a very strong point that you also are putting out, that no, it's not a super cycle. Things will ease out in sense of supplies going forward. There is going to be more supplies, newer supplies in the next year. So that whole thing that defines a super cycle is something that the commodities are definitely not in, is what you are saying. Gentlemen, thank you so much for joining us here on CNBC TV 18. We have to wrap up this special edition of Samvat 2078. But stay tuned. We bring you more news and updates on the other side of this very short break.